What's up, everyone? It's Karthik with MoneyVest. So welcome on board for our Market Open live stream. It's been a while because we had, of course, last week we did the Tesla Cybercab Robotaxi event. I wasn't available yesterday because I was traveling, and so we are live now with the earnings season getting started, with majority of banks beating expectations on revenue and EPS, because last week on Friday we did have a lot of banks reporting their numbers, and a lot of them, in fact, did really well. And pre-market today, we had companies like Johnson & Johnson, Bank of America, UNH, we had Goldman Sachs, we got Citigroup, Charles Schwab, PNC, State Street, almost all of them beating expectations on revenue and earnings per share. Goldman Sachs coming in with $8.40 in EPS, Citi coming in with $1.51. Charles Schwab at 77 cents, Bank of America 81 cents. We had Johnson & Johnson $2.42, and UNH reporting for $7.15. Everybody beating expectations on earnings per share. And as a result, we do have Bank of America pushing up over 2.8, almost 3% pre-market right now. Goldman Sachs is also absolutely crushing it after having two really strong green days, pushing up another 3% pre-market. We have Citigroup also pushing higher, so they're up over, let's see, 2.3% pre-market right now. And then if you come over to State Street, STT, it's up another 1.6%. And then finally, if you come over to PNC Financial, it is up over 31 basis points right now. So very strong move to the upside. If you come over to Bank of America, it is up another 3%. And let's take a look at Johnson & Johnson, J&J. J&J is down about 1.4%, so perhaps the only one of these stocks. Of course, it's not a financial company, but it is selling off a little bit here right now. And UNH is also healthcare provider, insurance provider, down a little bit over 4.5%, despite beating expectations on both revenue and earnings per share, coming in with $100 billion in revenue with $7.15 in EPS. So these were the actual numbers. However, it is starting to sell off a little bit here, over 4.6%. Pre-market, we do have QQQs right now at the moment, just basically flat after having a very strong day yesterday. And of course, we did have S&P 500 hitting a new record high yesterday, is up also 5 basis points. So both S&P and the NASDAQ are very flat right now, with NVIDIA slightly down about 75 basis points. Tesla is also very flat at the moment. So all in all, XLF, which is the financials ETF, pushing higher to a brand new record high, up over 71 basis points to $47.13. So very nice momentum coming in. And if you take a look at the weekly time frame for this particular ETF, I mean, it's just absolutely been killing it. Since October 23, it's up over 52%. Not to mention, of course, FAS, the financials 3X leveraged ETF, is up 2.4% pre-market since October 23. It is up over 200% in the last year right now. So very strong momentum coming in for this particular leveraged ETF as well. So thank you so much for joining, everyone. Welcome on board. Please do me a favor and share this live stream with your friends and family. Just copy the link and put it on your other WhatsApp, Discord, Telegram channel so we can have more people join us for this market open. It's just under 9 a.m. Eastern right now. We really don't have a lot of economic data that's coming out this week, so very light on economic calendar. So today, so if you take a look at low or essentially medium or high impact items, we have Fed Bostic speech, we have Kugler, we have Daly, Mary Daly's talking. The New York Empire State Manufacturing Index came out, coming in at negative 11.9. And then other than that, we don't really have anything that's on the calendar scheduled for today or even tomorrow. Thursday, we do have retail sales coming out, and then Friday we have building permits, housing starts month over month, year over year, and a few other FOMC members that are talking. So we're very light on the economic calendar, but pretty heavy on the earnings calendar, because we're pretty much getting started on the earnings season. Yes, everybody, congratulations on SoFi stock here, pushing up a little bit over 11% yesterday. Very nice move to the upside. This is the entire technical breakdown. We had a bit of a trade idea on SoFi. So if I essentially show you guys what we had on our on our Trade Ideas channel. So if you come over to Trade Ideas, you'll notice the last one was on SoFi, which I posted back in March. So earlier this year, talked about new trade idea on SoFi, target price $10.50. That was the target price from back in March of earlier this year. And this was the entire support zones that I've identified on SoFi, pretty much low sixes. That first area of green rectangle, so that's the area of rectangle here in the green, was that first area of support. And I don't think we broke down below $6, right? So that was pretty much the first area right about there. So that was the level that we were talking about in that particular post. And of course, target price was $10.50. So first support, $6.75. Second support was as low as $4.50. I said, although unlikely, this would be considered as a no-brainer buy price for SoFi. And the risk reward at $6 or low sixes was going to be a better risk reward ratio with a 40% profit potential, and a profit target of $10.50 was the target. And so, of course, we did have a 1050 target. So we'll see where SoFi ends up. You know, we're very close to our target price of $10.50. That is an area of supply. And this right here is an area of resistance for SoFi that we've been watching for a really long time. And of course, if we do get a breakout above this, then we're off to the races, potentially getting up to as much as, you know, $24.50. That's going to be the next potential and most obvious area of resistance where we have previously also gotten rejected. However, before we get up there, this all support could also act as a potential resistance for SoFi, roughly at $14 per share. So that is the overall technical breakdown on this company, and a very, very nice move to the upside in the last couple of days here. And it has rallied from low sixes back up to almost $10, a 66% rally for SoFi. And of course, the trade idea was posted right about here. That was March of 2024, so earlier this year. So we just did have to wait a lot of weeks here before it finally blew up to the upside. So patience is what pays over the long term if you've got the right idea. Okay, coming over to some of the comments here. So yes, congratulations to all SoFi stockholders. Let's see. Good day, Caddy. How are you doing? So doing well. Thank you so much. Big bounce in TMF and TLT. Good entry levels for a swing play. We'll talk about that here in just a minute. Vol says we're in the middle of the month. Let's see if Tom Lee is right that we are fooled by seasonality this time. Yes, October. Given that volatility backwardation, and just looking at VIX in general, it still is pretty elevated at just a little bit over 19, just under 20. So it's usually it is odd to see the VIX as elevated as it is, and the markets continue to rip higher. We're in the past, I've kind of mentioned in the previous live streams where when the VIX was higher at these levels between 19 and 21, markets were down 4 to 5% from all-time highs. So, when the VIX was elevated, we did have the markets selling off and rolling over. However, this time around, it is very different. Even though the VIX is elevated, we're still seeing this broad-based rally in the markets. And, more recently, it's been a risk-on technology-driven rally where a lot of Magnificent Seven and tech stocks are kind of dominating and having that leadership to push this market higher. So it is quite an odd, risk-on rally in the markets right now, despite also the 10-year Treasuries moving higher. So the 10-year Treasuries continue. The entire yield curve continues to move higher. We're starting to see a little bit of a pullback back below 4.1%. However, it's been on a very, very strong momentum higher for the 10-year Treasuries. So what is the future projection? So like I said, 1050 for SoFi, Ajay, is going to be that resistance for now. That's been my profit target for 2024. And of course, beyond that level, we're going to be watching, 13 to as much as $25. And as soon as it gets a breakout above 1050 and establishes that as a new support, then we're going to come back to our analysis and kind of, break down the next levels of target, next levels of resistance and support moving forward. So the first target that I'm watching right now for SoFi is 1050, whether it can break out above 1050 or not. Okay, let's see. I'm wondering about TMF2. I feel like every time I buy it, I get burned, but $51 seems like a decent entry. So yes, just be careful, where you're buying leveraged ETFs, because if you pay the wrong price and then it drops 20-30%, then you're going to have to dollar cost average further, more aggressively to lower your cost basis. And when it comes to leveraged products, it is a very, very cautious game that you have to play, because even when I'm trading, let's say TQQQ or TMF or any of these leveraged ETF like SOXL, I've traded them in the past, and my holding time, my holding period for any of these leveraged ETFs has really never been more than a couple weeks. Not even a couple weeks, maybe just a week, as I've held on to it. I had a trade on FNGU. A lot of you guys know. I traded FNGU on the way up after the August 5th blow up from the carry trade, from the yen carry trade. So we had a very nice trade on this. Of course, I sold too early, but I was able to capitalize on $1,500 to as much as $2,000 in profit, and I'm comfortable with that. I've traded TQQQ in the past multiple times. I've traded SOXL multiple times. I've even traded TMF. Made nice little profit. Sold roughly in the high 50s, low 60s. Didn't obviously hold it all the way up to as much as $65. But the point is that you're going to leave profit on the table. For me, having a fair assessment of risk and reward comes first, then trying to maximize my profit potential. My goal is to really minimize my risk as much as possible, and especially when I'm trading leverage ETFs, it is the main concern that I have, is because I don't want to hold on to an asset that's going to decay over time, and I'm going to have to like dollar cost average a lot more aggressively to lower my cost base and then hope that it's going to rally back higher, which from an underlying asset perspective, the underlying asset can go up to all-time highs, and the leveraged ETF can still be way below its all-time highs. So, and especially if you're looking at something like TMF or TLT, you'll notice how much it has dropped in the last couple of years. It's come down from its all-time highs of $550. It's down over 90%. And that's not the case for TLT, right? TLT is not down 90%. It is down only 40%. And even from its lows, you'll notice that at one point it was down a little bit over 50%, whereas TMF, of course, was down at one point a lot more than that. It was down a little bit over 93%. So pretty much had lost almost all of its value. So definitely be very, very careful when you're trading leveraged ETFs. Okay, bullish on Netflix. Everyone thoughts on earnings, possible split. Last was 2017-ish, 4.7 for one. Yes, Netflix is reporting later this week on Thursday, so October 17th, before the bell. Just under $10 billion in revenue with over $5.21 in earnings per share. A split is possible considering the stock price now trading well over $700. So, it is possible that they do announce a potential split. And again, support level going into earnings is going to stay up at $6.99 down to $6.61 for Netflix. So we're seeing a little bit of that negative divergence from the company as it continues to trade sideways on the RSI. However, the price, of course, continues to trade upwards, in this higher high and higher low pattern. So this really is the overall sort of very short uptrend that we're witnessing for Netflix right now. So support level low 700s down to 661 at the moment. Okay, let's go over to a few other companies. So Dell going crazy. Let's take a quick look on this stock. This has been doing really well on a year-to-date basis. Dell, of course, has been pushing higher. It's up 1% right now, so I wouldn't consider this to be crazy. But yes, year-to-date, it is up over 70%, so it's done really well overall on a 2024 basis, of course, surpassing the gains of a lot of other stocks, not to mention outperforming the S&P 500 and the NASDAQ as well. Okay, does the video on Google that you've seen recently change your view on Google so much that you're going to sell out of your position? So Vault, that's a great question, and I am considering it because I want to take a step back and evaluate the future of Google. And right now, the position that I have, I'm like slightly up on that position, so I might as well just take that profit and take a step back and reevaluate what Google is going to look like in the future, because there's a lot of concerning things from a search standpoint and how Google's business model has changed. In that video, they also talked about how Google, for the longest time, put the user as a primary objective, right? Providing the user with the best quality content at all times in the fastest possible way and the most reliable fashion. However, that has changed significantly because what's happened over the years is that since Google's significant amounts of revenue and profit comes from advertising, and 75% of advertising revenue comes from search advertising and not YouTube. YouTube accounts for 20 to 25%, they have really made some massive changes and a complete overhaul on how their business is run. And what's happened now over the years is, in that video, it's kind of like really detailed and highlighted very well. But what's happened is, like, if you take a look at the newspaper, right? And you know how the most important information in a newspaper is on the front page, but also in the first half of the front page. Why? Because even if the newspaper is folded, the person seeing the newspaper can see the first half of the front page. So it's never going to be out of your sight, right? So what Google does in the digital format is that every time you look up for something, they have now increased the amount of sponsored posts, right? So every time you look for something up, there's going to be sponsored ads. And they have increased by over 35% from 2017 to where we are now. They're taking up more screen space, so much so that the first half of your entire sort of screen, whether you're looking at on an iPad or a MacBook or a computer, whatever screen size you have, the first entire half is going to be sponsored ads. You actually have to take action. You have to scroll to go to organic posts. So that's number one. Number two, they've actually made these sponsored ads superior to organic results. So organic results, as a result, are inferior to a sponsored ad post. So if you're looking for something to buy, if you look for something on search on Google, you're going to get the exact results from sponsored ads. But if you look for the organic results, they're going to be completely off. They're going to be so inferior that you're going to be like, what the heck? Like, this is exactly not what I'm looking for. So they've made it more incentivized for businesses to spend money on advertising because they're going to get the edge from sponsored posts, sponsored ads, as opposed to doing it organically. And the third most important reason was the SEO. And SEO system has completely been, what's the word that I'm looking for? It's completely been compromised to a point where a lot of things are outdated. A lot of things are obsolete in terms of the search results. And a lot of times, a lot of these articles and everything that's been written on Google, all they're doing is they're changing the years to fit the SEO rankings. So for example, if you're looking for a chair and you look for an article, 5 best chairs of 2024, that article is going to rank obviously very high. But what that article may also do is that article may have been written in 2022, 5 best chairs of 2022. But all the authors, what they do is they go in, they edit 2022 and change that to 2024, and boom, you've got a fresh new article. And that's how Google ranks these articles, is that as long as it's been updated in 2024, it's a 2024 article. It's not a 2022 article anymore, even though all the information's still the same, outdated from a couple of years ago. So those are some things that I think were very interesting, is that Google's kind of put a blind eye to a lot of these things, and it's really changing the way it does its business, because it's now fully trying to milk as much profitability as possible. And it's gonna, I don't know. I mean, I've so far used Google as a search engine, but it's becoming less and less relevant for my personal searching needs. And I'm looking at other alternatives that are better, more accurate, more up to date and real time and more organic, as opposed to just on sponsored ads. And that, to me, is what I have to evaluate from an investment standpoint as well, because if me, myself as a consumer, I'm not too excited about where Google is headed, then I necessarily wouldn't be excited about as an investor either. So I guess that's a discussion that we can have about Google and its search business model over the long term. But again, that's going to be for a specific, more dedicated video, and we're going to have this discussion in our Discord as well. And let me know what you guys also think, or if you've experienced any of these things, yourself, because it makes sense, right? It makes a lot of sense, because at the end of the day, of course, Google has to make money. It has to make profit because it's a for-profit organization. It's one of the biggest tech companies in the world. But it's just the imbalance of, paid advertising and sponsored ads versus organic results has really tilted to a point where sponsored is all you can see and all you are getting and are incentivized to do, and organic is completely, put under the mattress here. It's just really bad results, inferior, all that stuff. But yes. So Brave, I've heard Brave is really good. Brave I've heard is very, very good in terms of no paid advertising, and you can accept if you want paid advertising or not. And I think Brave shares the revenue of the advertisers with the users. So if you have turned on advertising, I think you actually do see some revenue, some earnings into Brave coin, if I'm not mistaken. So I think that is a potential alternative also available. But that's the thing, right? Every new social media platform, everything that comes out is going to give you the free version in the beginning, right? Because you're the product, right? You are the product, right? We are the product for these tech companies at the end of the day. For Meta, we're the product. For Google, we're the product, because at the end of the day, what are they doing? They're selling ads, they're selling advertising from other companies and hoping that we'd convert, right? Hoping that we'd click on it, we'd buy it, and that's how advertising works. So yeah, I mean, numbers will tell the story, correct? At the end of the day, the numbers is really what matters most. And if Google is able to continue to be very, very, shameless about advertising and doesn't really care, the numbers will of course be gigantic for Google's profitability, and it wouldn't really matter. But eventually, it's gonna wear down people, and I think that's really what we're here to also analyze over the long term. So anyway, coming back over, yes, interesting, Caddy. I do agree. Google feature is interesting. I think it's more than half. I see 5 commercials in one video at the beginning of the video. Yeah, it's crazy. And it's also getting longer, right? 30 seconds or 40 seconds. It's crazy. You can't even skip it sometimes. That's why I've got the YouTube Premium. So YouTube Premium, of course, has been one of the best decisions I've ever made, to be honest, because every video on YouTube all the time is free of commercials. And so that has been such a time saver for me, because it's the best decision I've ever made, to be honest, like YouTube Premium. And if they can come up with a subscription for like a Google Premium or something where they don't give us any sponsored posts, but make the organic results better and more superior and exactly what we're looking for, would be ideal situation, would be much better for me. So let's see. Okay, Enphase. Let's take a look at Enphase stock. A lot of discussion about Enphase, but before we get there, yes, Google Cloud, YouTube, Gemini, Pixel should be their main focus. With Google issues, I'm more and more using ChatGPT and Perplex for specific to help me out with more information. I don't blame Google for getting advertisers. I would do the same. Still, running a search engine costs money, so these companies have to make money somehow. They will make money through ads. So there will never be a perfect search engine without ads. Correct. There will never be a perfect search engine, but I think if they can come up with a Google Premium, which is without any ads, I mean, I would be all for it. Enphase is a very good stock. It has a lot of potential as well. New solar panels companies are using Enphase micro inverters. Generally, the YouTube ads have gotten so bad. I've watched it too worse. Watch it get worse. Ad block, 58 seconds of video without premium. Sometimes I miss a gem on these lives. Can't watch YouTube without premium. Yes, it's going to be horrible if you're watching YouTube without premium. Google Premium would be so smart. Yes, I agree. I've switched to Perplexity for searches as a co-pilot. So, okay, I've never heard of that search engine. I'll definitely take a look at it. But let's just come over to Enphase. We spent pretty much a lot of time on Google. But Enphase, for the longest time, of course, consolidating sideways. And, it really just boils down to earnings. As I mentioned before, stock price is nothing but what it's really showing you is a perception of value. That's really what it comes down to, because in the short term, it is going to be a voting machine. Over the long term, it's going to be a weighing machine. As we know, it's one of the most famous quotes from Warren Buffett. And really, earnings are the weighing machine part of the equation. If earnings can grow, so will the stock eventually. Because if earnings are, for Enphase, get up to, let's say, $10 or $12 or $15 per share, all of a sudden the multiples have compressed down to such low levels that the market's going to accommodate for those higher multiples, and hence the stock price will go up. Now, because Enphase has struggled over the last couple of years with higher interest rates, the lack of demand, supply chain issues, kind of sell-through rates have come down. That's why, of course, Enphase has struggled quite a bit. It is still down from its all-time highs of well over $337, down over 70%. However, there's a lot of expectations that post-2024, so essentially starting 2025, earnings are going to now start accelerating back higher. 2024, we're going to see a big dip in earnings per share, pretty much get it cut in half. But starting 25, we're going to start to accelerate back higher for both revenue and earnings per share. And I think that's really what's going to lift the stock potentially back higher in the 150s and 170s once again. So that is what is expected out of Enphase. Right now, we're seeing a lot of consolidation for a little over a year now. So almost a year. So since January 24, pretty much December 23, we've just seen the stock price go sideways, and we got a very strong support here, $96, $97, resistance all the way up to as much as 124 to as much as 138 for Enphase as well. So that's going to be that level to keep in mind. Okay. Emre, hey Karthik, always appreciate the unbiased and analytical information you share. Getting to 100,000 subscribers is very close. Yes, we're very close, folks. Please make sure that you subscribe to the channel. We're getting up to 85,000 now. So if you guys know 15,000 people, share this video with other friends, family. I'm sure everybody's got at least 15,000 family and friends. So share it with everyone so we can get to 100,000 by the end of this year. That's a big goal of our channel, and it's not just me, it's everybody together that's going to help this channel grow. It's our community that's going to grow to that level and going to be super exciting. And hopefully by the time we get together in our future events, we're going to have one in Florida in November, and then we're going to have more events throughout 2025, in-person events where you can come in, join us for lunch, for dinner, for coffee, whatever. We're going to discuss the markets. We're going to discuss money, taxes, trading, investing, everything. So it's going to be a pretty exciting event. So definitely do subscribe if you haven't already, and also share this with your friends, family, other traders, investors that can benefit from all this info. But yes, let's take a look at ACMR. So this, I feel like a stock is, we have analyzed this before, but let's see, let's take a look here. We got revenues that are consistently growing, earnings also pretty solid, coming in with over $77 million in profit, just under 14%. In net margins, and let's take a look at valuation. So just under 17 times in earnings per share multiple, 2 times sales, and a little over 1.6 times book value. No price to cash flow for the company, which is quite interesting because it doesn't have a positive free cash flow. So we've got negative free cash flows every single year. So maybe that's something that you may want to look into, Emre. And then if you come over to the balance sheet, you've got a negative net debt. So that is also pretty good because that's what we want to see. We want to see the companies have more cash than debt on the balance sheet. And in terms of earnings expectations, very solid, $1.58 growing to over $2.28. And revenue also expected to increase from $730 million to well over $1.2 billion. So you've got a low valuation, expected growth in revenue and earnings. Balance sheet is solid. Very quickly taking a look at the shares outstanding here. And you've got that to be very, very flat, very moderate increase on a year-over-year basis, going from 38 million to well over 56 million shares at the moment. So free cash flow is the only thing that is pretty negative. I'm assuming it's because of a very hefty CapEx, business model. And if you come over to the cash flows, and let's just remove for this, and this, and then we come over to financing. Investing activities, we're going to find the purchase of or capital expenditures, which the company is making in the tune of, so on an annual basis, actually 64 million, 92 million, which from an operating cash flow standpoint, let's see, cash flow from operations. Yeah, it is still pretty high for the company, right? So free cash flow is negative. So from a technical analysis standpoint, we'll keep a close eye at, of course, these massive support levels for ACMR at 579 to as high as 1381. And then we've got a resistance all the way up here at $34 to $35. So it's really just going to be a range as opposed to a area or just a level. So this is going to be that range of resistance and supply for ACMR. And then support level is going to stay put here at 1381 for ACMR. So that's going to be that level to keep in mind. Okay, so we got about 7 minutes left for markets to open here. And let's see what the markets have in store for us. Kevin, sorry I'm late. You better be sorry. No, I'm just kidding. So TMF at $51. So the yields are coming down, so that's good. However, it's not the best risk-reward ratio, I would say, for TMF. I think a better entry would be around $43, but it does seem like it's very, very oversold right now. And the fact that yields are coming down, there is possibility for a nice little swing trade for TMF. And I would keep a close eye on a potential target up to as much as $56, $57. So that would be the near-term target, all the way up to as much as 64 for TMF also. Today is the day for Tesla. Well, we'll see. Up another 64 basis points, back up to 220. The SpaceX launch was insane, absolutely crazy. Just the way the booster got caught back in its original position. I mean, just absolutely incredible. I mean, this is, obviously SpaceX made history. I'm not really sure if NASA ever said that this was impossible to do. I think there's some speculation. I read somewhere that NASA said that, this was impossible to do, to bring the booster back to Earth in one piece, let alone, of course, bringing it literally back to the same place where it launched from. But it was just incredible. And props to SpaceX engineers for creating history and just, it was such a goosebumps moment. Like, I obviously did not catch the event live, but I watched the recording, and the 7-minute mark, the last 15 to 20 seconds as it's coming back down is like literally goosebumps. It's like you watch that and you're like, oh my God, it's insane. But yes, TSM earnings are also coming up later this week. So if you come over to TSMC, pretty much near all-time highs here. Earnings are scheduled for Thursday, October 17th, alongside Netflix earnings. Expectations are for $1.78 in earnings and revenue at $23.3 billion. Yeah, that was an absolutely amazing feat. Like, it was snagged right out of the air. And right, like, towards the end, as it was, like, coming back down and just, like, took a step, just took, put 1 inch further and then dropped right down, perfectly landing. It was just mind blown at that moment. I was like, no way. And then I saw a lot of videos from, like, different angles of people recording, and the atmosphere, the environment, the vibe, everything was just crazy. And that dude says, I feel the same way about everything that's going on at Tesla. I also watched the MKBHD take on the Cybercab and the Robotaxi event. Of course, he was there live. And he got the chance to ride in one of the Cybercabs. And, of course, there was no steering wheels or pedals. But it was a pretty fair take. I think more negatives than positives from that takeaway from MKBHD. But that's fair because the biggest red flag, of course, from him also was the timeline. Yeah, I thought it was going to hit the tower. That's what I'm talking about, right? It almost felt like it was going to hit the tower, then it moved, a couple inches forward, and then it dropped right down. And that's what was like the crazy part, is like recognized, where the tower is. And something that was unmanned. It's just mind-blowing. But yeah, I mean, I feel like we can discuss the Robotaxi event over and over again. There's definitely a lot to discuss and go over. And I think it really just comes down to the timing of everything, right? Timing of when this is going to all be live and when it's going to be delivered and materialized into actual revenues and profits. And then that's when Wall Street's going to come online to coming in with a revaluation of overall Tesla's value and business and whatnot. Of course, 220, you can make a case that it's still priced for, it's still priced at a level which is overvalued or which is expensive, and I wouldn't argue with that, because purely based on electric vehicles, the fair value drops to like 150s or 175. However, if you do believe in the long-term future, and that's when the discrepancy comes in, where Wall Street tends to be very short-sighted. They want everything now, or how is this going to affect the numbers over the next couple of quarters, and again, retail tends to be very long term, right? It tends to be looking at the next couple of years or 5 years plus. And so that's where the discrepancy comes in, or disconnect really between Wall Street and retail. So TM Knight says the Optimus could be the future rather than Robotaxi, I felt, but not sure if those robots had some humans controlling behind the scenes. It did. So it was partially operated by humans, because I read a couple comments where a few people asked the robots point blank, like, are you fully autonomous? To which the robots responded eventually that we will be, but right today we are not. So it kind of implies that, to some extent they are human operated. Because even the language, even the things that we're saying, obviously there was no large language models, and there was really no autonomy to the tone of what they were talking about. There was actual human. It felt like an actual human talking, from those robots. So that again, I think it's there's been a big debate whether they were operated or not. But in my opinion, I think they were. But it really is just the whole idea, the whole concept, right, of what the future could look like. And I agree. I think the Optimus may be a bigger opportunity for Tesla than the actual Robotaxi itself, because the Optimus is a clear B2B business, selling to manufacturers, selling to businesses, selling to warehouses, logistical companies, delivery companies, and just utilizing that technology to increase productivity, lower cost. Robots don't need health insurance. They don't need brakes. They don't need anything that humans need. And of course, they can work overtime, and they can work around the clock 24/7 and increase productivity significantly. So in my opinion, that's a much bigger play than the Robotaxis. But Robotaxis going to be more to consumer facing, consumer focused. But of course, that autonomous technology in general has a huge market to capitalize. Okay. Okay, let's see. Did you buy the options for TSM or Netflix? Not yet. I'm not trading anything on TSM or Netflix right now. Celsius CSP was an awesome play. Planning for CSP on Celsius again. Yes, so I may. What is it today? Today is like Tuesday. I may look into puts expiring this Friday to just generate some premium. We'll be looking at, let's say, $33 in strikes. So we'll update everybody in the Discord. And we'll talk about that, because I do have some cash sitting on the sidelines right now that I like to utilize, like 7,500 in the options portfolio. And let's see if Tesla can break above 225 or 230s this week. I really don't want it to go above 235. That's my call strike. Kind of broke my rule number one there, but I'm going to be rolling it out. I'm really rolling out NVIDIA right now. I'm just done. I'm rolling out NVIDIA either today or tomorrow or Friday. And I'm really rolling it out to December, increasing my capital gain another $5-6 per share. That's going to be coming out to $3,000 to $4,000, and that's it. Like, Nvidia is just really going higher and higher, and I really want to capitalize on that capital gains as much as I can. And for Tesla, we'll also be rolling it out if it continues to move higher. And the long-term vision, I think it's really important for people to keep in mind. If you are a long-term investor, if you're trading it, then of course you can look at the volatility. You can trade it however you want. The long-term is where it's at. SoFi, PayPal, FC, Nvidia, Tesla. Who cares about Tesla? Just curious, what's your plan if it tanks hard below your strike, Milan? For which stock? Nvidia? Is Nvidia the one that you're talking about? I'm not surprised these kinds of advancements take time, but 10 years ago we wouldn't even think the kinds of bots were possible or true. That's very true. Kevin, so we dumping Google. I might free up some cash from Google either today or tomorrow because I'm really a little unsure about the future. But again, it is still not materialized yet. So this might still be a thing that is way into the future in terms of their advertising business because of how big it's gotten. It's still going to take time before it starts to really deteriorate. So if it's not a decision today or tomorrow, eventually I will make a decision whether to buy more or to exit. Either way, I'm going to do something with Google very soon. I just need to do more due diligence and research on Google and the overall story that's still in place right now. Yes, okay, Nvidia, and rest some ride. Not telling you what to do, but just really curious what you're thinking. So, when it comes to Nvidia, the reason why I'm pushing out my expiration to, let's say, December and increasing my call strike to 118 or 120 is because that would still keep me around $20 to $25 in the money and a couple months out. Nvidia earnings are in November. Now, you're right. If Nvidia drops below my call strike, then what ends up happening is that I get to keep the entire premium free and clear, and get to keep my entire shares, so I can continue to run the wheel. The only problem with that is going to be if Nvidia drops below my cost basis by the time expiration comes around. And my cost basis right now is low 100s, as you know. It's like closer to 103 after all the premiums that I've sold. So can Nvidia really drop down to $103 by December? That's going to be a 25% drop. So 25% drop by December. Yes, it's possible. It's something that Nvidia is known for. It can easily do that. But even then, I would still want to buy more shares of Nvidia so I can keep running the wheel. So for me, the risk reward is really not that much. And yes, I'm not worried about losing my capital appreciation. What I'm really right now focused on is increasing my potential capital gain, because I'm sitting on almost $20,000 of unrealized capital gains on Nvidia, of which only I think 6,000 is realized, or realized in the sense that it's only 6,000. That's what I'm gonna get. But if I'm able to push my expiration out, increase my call strike, then I'll unlock another $4,000 or $5,000 and get that capital gain to $10,000 to $11,000, plus the premiums that I've collected along the way. So that would be the idea behind pushing out my call strike. Okay, Tesla's on the move a little bit, up over 2%. So 224 right now is where it's at. The last thing I want is Tesla pushing back above 235. So that's the strike that we're watching for today, for this week, actually, for Tesla. And of course, Nvidia can go as high as it wants. I'm just going to be planning to roll it out to collect some more premiums. And it is kind of crazy. Like, if I really start rolling out to like next year, 25, then the premiums are just obviously insane for Nvidia, because these would be in the money calls. And so for that reason, I'd be looking at pretty hefty premiums. So yes, that's the plan. If I roll out right now, let's take a look at what I'd be doing. So if I roll to December 20th, I can only really increase my... Oh, no, I can. So 115, no, 118. Let's try 117. Yeah, 117 becomes a bit of a debit. 116 is still a net credit of a nice little $500. If I go to January 25, then I can increase it to 118 or maybe even 120. No, 120 is going to be a small debit. 119 maybe. There we go. 119 to January 25, and that's going to be another net credit of just under $300. So not only am I raking in credits, but also unlocking more and more capital gain. That's going to be an additional $6 in capital gain for $600, 600 shares. That's $3,600 plus the net credit of 225 or 228. So that's going to be the potential idea. Of course, I don't want to go too far out. Nvidia, just give me a red week, for God's sake. Anyway, so that's going to be it for today, everyone. Thank you so much for joining us. Make sure that you drop a like and subscribe to the channel. Markets right now, QQQs are very flat. So is the S&P 500 after a very strong close yesterday, hitting new all-time highs. The big sector that's leading this market higher today is real estate. The bond market getting a nice little rebound. Discretionary utilities back in the green, and energy dropping pretty hard after energy prices rolling over, down over 2%. And of course, we do have Tesla pushing higher right now, so a little bit over 1.5%, and Nvidia also basically flat at the moment. So thank you so much for joining, everyone. Make sure that you drop a like and subscribe to the channel if you haven't already, and please do me a favor and share this video with your friends, family, other traders, investors that can benefit from all the info here. And I'm going to jump into our Discord to share some updates and some alerts over there. So link's going to be down below if you want to join our Discord and get access to all the trade alerts, all the members only videos, as well as options portfolios and the MoneyVest website. Everything's going to be available. So